fall is because of global factors. We are joined by Tim Condon of ING Financial Markets now. Tim, good morning. What's happening globally? What's happening in the US market, first of all? The kind of fall that we saw has got a lot of people worried.
Well, good morning. I think China. I think the FOMC minutes that were released a couple of days ago mentioned China, and now we've got a poor print from the August flash manufacturing PMI index, and that has reinforced that sense that there has been a material slowdown in China, and that which the FOMC minutes warned could be bad for U.S. growth. And I think investors, well, it's obvious investors are pushing out that the likelihood of a September rate hike, and you're seeing that in this flight from risk across all risk assets, treasury bonds rallying, the dollar down, commodities down, equities down. So I think there is a great deal of uncertainty about what's going on in China. I think that's China's sort of the epicenter of investor uncertainty, and until visibility improves, I think we're in for a bumpy patch here.
Tim, what is your expectation from the European market opening today?
Well, I'm in Asia, so I can only imagine that the contagion from what investors wake up and see what's going on in this part of the world, and it was a bad night in Wall Street overnight. I suspect it will be a poor opening there. There may be some. Additionally, there is the uncertainty around the call for elections in Greece. So I think there's enough uncertainty around that. I'm expecting a red opening there as well.
Okay. But Tim, what's the chance that what we're seeing right now could be start of a bit of a bear phase in global equity markets?
Well, I think it's serious. Some of these, you've got several emerging markets that have locked in spending patterns that were based on an outlook for commodity prices that has proved wrong, and adjusting in those economies is proving difficult, and there are a couple of candidates like that in Asia, notably Mongolia, Indonesia, and Malaysia. Now, disorderly exchange rate depreciation in any large economy, and that would be in this part of the world, Indonesia or Malaysia, I think would have global repercussions, but it's not just Asia, right? I think you've got, there are countries you can identify in the Middle East, I guess nearly all of the BRICS, with the exception of India, would be candidates. So I think this is a dangerous patch for investors. They need to be very cautious at this point until we have more visibility on China. I think the risk of a crisis somewhere is elevated.
Are we in a new normal for oil prices now, Tim? For example, NYMEX, I think, is at the longest weekly losing streak that it's seen all the way back since 1986. And even Brent crude is now testing $45 per barrel. Is this a new normal?
Well, I wish I knew the answer to that. I tend to think that commodities are moving very closely with the U.S. dollar, but that correlation has broken down a bit since July. You've had really a collapse in commodity prices, and the dollar hasn't moved very much. Now, many things could explain that. A new normal among them, but I think until we have greater visibility on some of the cause, I think you could also just put China into the mix. It may be just a repricing for much slower growth in China. It may be that oil is heading back to $20 a barrel, and I think we just don't have a very good idea, and that's certainly not the ING house view. But I think convictions on those house views have dropped sharply because of the volatility in the market. So more visibility is needed, I think, before people are going to be comfortable in coming back into these risk assets.
Okay, fair enough, Tim. We leave it on that note. Thank you very much for joining in and giving us all that global opinion.